Hey guys, how's it going? Solo here. It is Thursday, July 23rd. It's almost 7 p.m. A little bit later than my usual time of making videos, but what a big red day in the market, huh? I think we were due for a big red day. I think it was just a long time coming, meaning we've had so many green days in a row the past week and a half that you knew the market was going to pull back at some point. So it looks like today was the day, right? Amazon down almost 3.7%, Google, Facebook down 3%, Microsoft, Apple down 4.5%. So not financial advice, but if you were looking to get into some of these big tech stocks, you got a pretty decent pullback today. So today might have been a good day to sell some cash secured puts or to just flat out buy shares of stock if you wanted to go long and you felt like you kind of missed out on some of this run up. But again, not financial advice, but overall red day in the market. So overall, a good day to open up a cash secured put. Probably not for a tomorrow expiration, but probably for an expiration on the following Friday, so July 31st. I unfortunately didn't have any dry powder left to open up any cash secured put positions on any of my big name stocks like AMD or Micron or IWM. I had a few bucks left where I could have opened up a put on Space, and I certainly thought about that. But we'll get into that in a second or two. But look at the semiconductor stocks. AMD was down 3.6%. I kind of expected that just because there was such a big run up yesterday that I felt that we were going to have a little bit of a pullback at least, just because of profit taking from that huge run up. And also, depending on how people want to play AMD earnings that are coming up on Tuesday, they want to get out now if they think that AMD is going to drop like it has the past 2 or 3 earnings after earnings. So might as well cash out high before it drops even more potentially after earnings. But Nvidia was also down 3%, Intel down 1%. So Intel we're going to keep an eye on because actually Intel had earnings this evening after hours. So we'll take a look at the Intel chart. But Disney was also down a little under 1%. So just overall red day in the market for a lot of the big name stocks. So let's take a look at AMD. So here's AMD. We kind of opened up flat, traded flat until roughly about noontime. Then we went red. And then look what AMD did after hours. Literally, we closed at 4 p.m. down about 3.5%. The moment 4 p.m. hit, the moment the markets closed, AMD shot up back to baseline. It shot up 3.5% or $2.16 back to where we closed yesterday. And look what it's doing after hours. It ran up another, 61.73 to a high of 64, another like $3 after hours. Craziness. So right now we're up 7.6% after hours. AMD is setting more all-time highs after hours at $64. Just craziness. And the reason why I think this is happening after hours is actually because of Intel. If we take a look at Intel, so if you take a look at their earnings, they missed earnings by a decent amount. So look at Intel. Intel was pretty much flat all day long. It didn't do anything. I think people were just waiting on the after-hour earnings session. They didn't know what to do. Buy, sell. They just kind of stayed the course. And then look what happened. 4 p.m. happened. Intel went from $60.40 all the way down to $55.34. It dropped almost 8.4% after hours, and it's still continuing to bleed out slowly. So I think this is why AMD skyrocketed, because AMD and Intel are direct competitors in the CPU market. So I think Intel dropped because AMD has been crushing it right now in the CPU market. So I think it was kind of like a yin and yang where if Intel is going to drop, people are going to get into AMD now. And that's why AMD took off. So gosh, I really missed the boat. I really wish I had AMD shares in the 40s. At this point, I wish I had AMD shares in the 50s because it's gone parabolic. I mean, it's crazy. Let's take a look at AMD's chart. So if you remember from my prior videos, I drew these yellow lines as kind of the support and resistance lines for the past few weeks or about a month and a half of trading for AMD. And as you can see, it's been bouncing right between about $49 and roughly $59, just to keep it a $10 wide gap there. But yesterday, we saw it gapped up. It blew past this resistance at 59. And not only did it blow past the resistance, but if I zoom in, it blew past the 100% Fibonacci level as well. So We blew past it all the way up to about $61, $62 yesterday. We had a pullback today because it was a red day, probably just because the market was red overall and a combination of profit taking as well. And look what AMD did. I mean, this is why Fibonacci levels, I know not everybody believes in them. Some people think they're just voodoo, but it's sometimes scary how accurate they are. Look where AMD did. It bounced right off this 100% Fibonacci level. I mean, it's kind of eerie how accurate sometimes these Fibonacci levels are. But if you watched my video from yesterday, you knew I kind of expected AMD to pull back because we were already in overbought category or overbought RSI based on where we closed yesterday. So I don't think it was a surprise to anybody that AMD pulled back. And you can see now at market close, we're about roughly at the 50% or 50 RSI level. So not really overbought, not really oversold. But I think what caught people off guard was the huge run up after hours. So we'll have to wait and see what happens tomorrow. I'm going to predict that because since we had such a big sell-off today, I'm assuming the market is going to be a little bit green tomorrow, pretty much sideways to a little bit green, just to kind of end the week, going to the weekend on a green note. I don't think we're going to have a crazy big bounce green. Again, this is just my prediction. It's just based on gut feel. It's not based on any science or technical analysis. But I think we'll have like a sideways to a little bit green day tomorrow. But again, since AMD rocketed back up, so this chart is not up to date, right? Because this is only tracking during market hours trading, because as I showed you on Robinhood, AMD is at 64 right now. So it's actually all the way up here, right? It bounced up, it gapped up yesterday, traded red during the day, and pretty much gapped up again after hours, so all the way around here. So again, I'm going to predict that in the morning tomorrow, we're going to have a little bit of profit taking off AMD. But if you saw my video from yesterday, you know I considered opening up a put on AMD. And when I say opening up, I meant buying a put on AMD, just because I thought today was going to be a little red. And then I also thought after earnings on Tuesday, AMD might drop like it has done the past 2 or 3 earnings sessions. And maybe I'll make a little bit of profit off buying a put on AMD. I did a little bit of research. I talked to a few people. And in the end, I decided not to open up that put. You know, if I did, let's take a look at the options chain on AMD to see what would have happened if I opened up that put first thing this morning during market open. And the reason I didn't do it also, and I kind of lucked out, is because I was watching AMD in the pre-market hours right before the market opened, and AMD was running up like 60, 70 cents more than where it closed yesterday. So it's still going green. So in that case, the puts would have been even cheaper because let's say I selected the 57 strike put. It was trading at roughly $120, $130 yesterday. And then when I checked at market open, it was a little bit less than that. It was in the 1-teens because, again, the stock price went up. So the values of the premium went down because that put was further out of the money. So in retrospect, let's say I just happened to buy that put right at market open for $120. Right now, that 57 strike put is trading for $160 roughly. So I actually would have made, if I just held it for today, $40 in profit just because AMD basically bled off today. However, this number is not going to be accurate because we had that after hours run up. You can't trade options after market hours. So you can only trade options during market hours. So this number, based on what we know now, is not going to be accurate. I suspect when we open tomorrow morning, this number is probably going to be less than $120. It's probably going to be like $100 at best, just because right now, this is further out of the money than it was when the market closed. So in retrospect, if I could have a time machine and I did end up buying a put this morning, my best play as of right now would have been to sell it before the market closed today and make a quick $40 in a day. Now, it's a good thing I didn't open the put because I probably would have lost money once market opens tomorrow since AMD shot up after hours. And the other reason that I don't think buying a put was a great strategy in terms of playing earnings was because of what's called the IV crush or implied volatility crush. And what that means is, so these premium values or the premium values of any option for any stock has a component of vega. If you heard of the Greeks, which basically is a measure or represents volatility. So the higher the volatility of a stock or an option, the higher the premium value. So pretty much all stocks and options in the run up until earnings, they're going to have higher volatility. So that means they're going to have higher premiums. And then once earnings happens, and then the day after earnings, volatility drops significantly, right? Because now earnings has already happened. There's no more fear or anxiety about what's going to happen with earnings. So volatility drops significantly. And because volatility drops significantly, the premium values drop significantly. So actually, whether the stock goes up or down after earnings, you still have to take into account the drop in volatility, and that drop is called IV crush. So if any of you have ever, let's say, bought an option through earnings, and let's say I bought that put on AMD and held it through earnings, and AMD did what I thought it was going to do. I thought it was going to drop, and AMD did drop. It is still possible to lose money even though AMD or the stock moved in the direction that was favorable to you. And when that happens, it's usually because of IV crush. And what that means is, even though the stock moved in the direction you needed it to move, the drop in volatility caused such a big change in the option price or the option premium value that it overshadowed the change in stock price. So to put it another way, think about it this way. Let's say you're studying for a test, and the days leading up to the test, you just kind of get more and more nervous, right? You're most nervous pretty much right before the test happens. So like the morning of, or the period right before that class test is, you're the most anxious and you're the most nervous. So that means, an example, that volatility is the highest. And then after you take the test, whether you failed the test or you aced the test, your anxiety and nervousness drops, right? It doesn't matter how you did on the test or how you think you did. You're still just less anxious because it's over. So in a similar vein, volatility is very high up until earnings. Once earnings happens, regardless of whether it was good news or bad news, the volatility drops. So again, option premiums drop just because volatility drops. So let's say after earnings, AMD didn't move a penny. Let's say it just traded completely sideways. It didn't go up a penny or didn't go down a penny, just completely sideways. Your premium values are always going to go down because of IV crush, because there's less volatility after earnings than there was before earnings. So if you're Theta gang, like we are, or I am at least, you want to sell options when there's high volatility. Because again, now you're going to use not only time to your advantage, but you're going to use volatility to your advantage. So it's almost like your Vega gang, if you want to think about it that way. So you always want to sell options when IV or volatility is high, and you always want to buy options when volatility is low. So for me to want to buy a put before earnings is not actually very smart in retrospect, because not only would AMD have to move in the direction that I wanted it to move, but it would have to move so much so that it compensates or overshadows the drop in volatility. Because I already know that my premium value, if I bought a put, is going to drop after earnings just because volatility went down. But that would mean that I would need AMD to drop by a lot. So that just wasn't a good play or good strategy in my opinion. So my revamped strategy is, since AMD's earnings are on Tuesday after market hours, what I think I'm going to do, and also because I don't mind getting assigned shares of AMD on the cheap, or at least cheaper than what they are now, I think I'm just going to open up or sell a whole bunch of cash secured puts on AMD on Monday, because then I can use that IV crush to my advantage. Because Monday, again, the day before earnings, the volatility is going to be super high on AMD options, which means that the premiums are going to be very high. So if I sell those options, I'm going to collect a lot of premium. And then on Wednesday morning after the earnings, Tuesday after market, the premium should all go down just because of IV crush. So if I really wanted to, I could close my positions Wednesday morning and just collect the profit from IV Crush if I don't want to get assigned shares. Let's say my strikes aren't being tested after earnings. Well, again, I could just ride those options to expiration and collect max profit. Or on the flip side, let's say they are getting tested, I could just let myself get assigned AMD shares on the cheap, all while collecting premium as well. And if I believe that the after earnings drawdown is kind of an exaggerated response, well then it might be safe to assume, if that's my hypothesis, that AMD is going to come back up, right? So if I do get assigned shares, I can sell covered calls or just flat out sell the shares outright for stock appreciation. So that's kind of my new strategy, is that I think I'm going to not end up buying a put because I don't think that's very smart. In my scenario, if you watch my video from last night, I would have basically ended up net zero because I would have collected premium from the puts I already sold on AMD. And then in theory, I would have lost premium by buying that put. So it would have been a wash in general. But I don't want to throw away my profits that I'm already having right now from my cash secured puts on AMD, which are at the $51 strike price, expiring this coming Friday, the 31st. So not tomorrow, but the Friday after. And I think what I'll do, I think the better strategy is to open up some cash secured puts and basically sell puts on AMD Monday and then use IV Crush to my advantage. I think that's the smarter play. Let me know what you think in the comments below. Let me know if you're playing earnings on AMD and what your strategies are. Let me know what you think. But I mean, AMD's been a rocket ship. I hope some of you have shares of AMD and you're just making bank right now off the run up the past 2 days. But as always, if you have any questions or comments, leave them below. Make sure you check out the Discord server. There's a lot of cool people in there. We're sharing a lot of good information. We're talking during market hours, after market hours. Yesterday we were in voice chat, just kind of, comparing notes basically. But a lot of good information in there. We have a lot of good participation already. There's probably about 75 or 80 people at least in the Discord server already. So feel free to join right now. It's free for the time being. But yeah. Let me know how your week is going so far. One more day left in the trading week before the weekend. And as always, happy trading.